Assalamualaikum and hi to Dr. Saliza and my fellow friends. Today my team and I will be presenting topic 8, which is Real Property Gains Tax Rpgt. My name is Nur Kamarina binti Muhammad Kamal 264774. I will be presenting the first part of this topic. So as you can see, these are the subtopics that we will be covering. In short, Rpgt is a tax imposed on gains derived from disposal of real property levied by the Inland Revenue Board. In simplest term, it is a tax on your net profit when you sell a property. So the first legislation to tax gains from the disposal of real property was introduced through the Land Speculation Tax Act 1974, which came into force on 6 December 1973. The LSA, however, was repealed in 1975 and replaced by the Real Property Gains Tax Act 1976, which is effective from 7 November 1975. So subtopic 1, Assessment and Collection. So Assessment and Collection has been explained under Part 3 of the Rpgt Act 1976. So according to that Act, there are 18 sections in total that clarifies about the assessment and collection of Rpgt. As you can see that there are year of assessment, chargeable person to be assessed, unchargeable gains, returns, assessments, additional assessments, cases where acquirer may be assessed, notice of assessment, right of appeal, error or mistake, finality of assessment, payment of the tax, certificate of clearance, requisition to acquirer, recovery from persons leaving Malaysia, recovery by suit, refund of overpayments, anti-avoidance provisions and remissions, which are accordance to the respective sections from section 10 until section 26. Moving on to the next subtopic, which is chargeable gains and allowable losses. So as a quick intro, in section 7, subsection 1 of Rpgt Act 1976, it is stated that 1. If the disposal price is equal to the acquisition price, there is neither a chargeable gain nor an allowable loss. But if the disposal price exceeds the acquisition price, there is a chargeable gain. And last but not least, if the disposal price is less than the acquisition price, there is an allowable loss. For acquisition price losses, in paragraph 4, schedule 2 of Rpgta 1976, the acquisition price of an asset is the amount or value of the consideration in money or monies worth given by or on behalf of the owner wholly and exclusively for the acquisition of the asset, less of any sum received by way of compensation. Second, less of any sum received under a policy of insurance. And last is less of any sum forfeited as a deposit made in connection with an intended transfer of the asset. Besides that, in paragraph 6, schedule 2 of Rpgta 1976, elaborated that for the purpose of paragraph 4, the incidental cost of the acquisition of an asset shall consist of expenditure wholly and exclusively incurred by the disposer for the purpose of the acquisition or the disposal, being first, fees, commission, or remuneration paid for the professional service of any surveyor, valuer, accountant, agent, or legal advisor. Second, cost of transfer, including stamp duty. And the third is the cost of advertising to find a seller and any interest paid on capital employed to acquire the asset.
Assalamualaikum warahmatullahi wabarakatuh and good day to Dr. Saliza and my fellow friends. My name is Azra binti Azmi. My matric number is 273982. Alright, now I will present 8.2.2 disposal price derivation. So how to get the disposal price? The formula is according to paragraph 5 schedule 2 Rpgt 1976. The formula is consideration minus permitted expenses, which is consists of paragraph 5, clause 1, clause A, expenses incurred to enhance or preserve the value of asset. And then paragraph 5, clause 1, clause B, expenses incurred to establish, preserve or defend the title or right over the asset. And paragraph 5, clause 1, clause C, which is the incidental cost. So then you will get the disposal price. Okay, now we will move to the case that is related to the computation of disposal price. So the case is in between CWV Director General of Inland Revenue 1989. So in this case, CW acquired his house by applying the loan. And then after he disposed his house, he claimed for the deduction of interest paid for the loan. But then the court held that according to paragraph 7, clause 6, schedule 2, Rpgt 1976, it excludes expenditure which is deductible for income purpose, or which would have deductible if not for an exemption from income tax. Therefore, the interest paid by CW would not be deducted in computing the acquisition of his house. Okay, another case is related to computation of disposal price, which is between Ketua Pengarah Hasil Dalam Negeri versus Chan Lian Yen 2010. So the facts of this case is the respondent they had disposed of certain shares in a company called CKSP. And then the respondent and another held 100% of the fully issued and paid up share capital of CKSB. But then less than a month after CKSB entered into an agreement to purchase the land, the respondent and the other entered into a share sale agreement. Then the appellant, the IRB, raised an assessment under the Real Property Gains Tax Act 1976. So the respondent appealed to the SCIT, Special Commissioner of Income Tax. So the SCIT found that the disposal price was the purchase price of the shares. So the IRB appealed to the High Court. So the issue in this case is, what was the disposal price for the transaction? The decision for this case is, the appeal was allowed. So based on the facts, the share sale transaction between the respondent and the company was the sale of a real property company made up of 500,000 shares held by the respondent and another. So the total consideration for the purchase of the CKSB shares comprised of cash payment of the purchase price of the shares plus the purchase price of the land. And then the purchase price of the land was a material consideration and was evidenced by the fact that the respondent had a right to terminate the share sale agreement if the company failed to pay the said sum. So the disposal price should be the actual price of the shares plus the purchase price of the land. Okay, now we will move to 8.2.3, transaction at market value. So the type of transaction where disposal is deemed to be for a consideration is equal to a market value of chargeable asset. So asset is not acquired or disposed at arm's length transaction. And is acquired or disposed by way of gift according to paragraph 12, schedule 2. So asset is acquired or disposed wholly or partly, first for a consideration that cannot be valued, or 2, in connection with a loss of office or employment or diminution of emoluments, or in consideration for employee services. So asset is acquired or transferred by a trustee for a creditor of any person in full or part satisfaction of any debt due from that person or due to the creditors. So asset is disposed for the transfer of a business for a lump sum consideration. So according to section 25, clause 2 applies, which is the transaction is made under a scheme or arrangement for avoidance of Rpgt. now we move to 8.2.4, which is market value. So the definition of market value is in paragraph 11, schedule 2. So the first one is subject to this paragraph. The market value of an asset which is acquired or disposed of is the price which it would fetch if it was sold in a transaction between independent persons dealing at arm's length at the time of their acquisition or disposal. So in addition, the case of Ng Tiao Hong versus Collector of Land Revenue Gombak 1984. So in this case, Federal Court Syed Agil Barakbah explained that market value means the sum of money that a willing vendor might reasonably expect from a willing purchaser. So the elements of unwillingness, sentimental value and urgency of the acquisition must be regarded. Okay, number 2. Market value is determined by the Director General in the following circumstances. First, the parties to the disposal of an asset are unable to agree on its market value, or number 2, there is only one party to the disposal of an asset, or the Director General is of the opinion that the market value of an asset as agreed on by the parties to its disposal is incorrect. So the example of case related to this is PPH versus Director General of Inland Revenue 1988. So in this case, the taxpayer sold a piece of land for 22,000 ringgit and 525 ringgit for an urgent need of 20,000 ringgit Malaysia. So the IRB valuer assessed the value of the land at RM 50,000 ringgit, and the taxpayer was assessed to Rpgt accordingly. So the IRB contended that it was empowered to do so pursuant to the provision in paragraph 11. So the court held that the IRB could not impose a market value on the land on the basis of its valuation report for the purpose of computing Rpgt in the circumstances where the disposal was an arm's length transaction between independent parties. So the IRB should have taken into consideration the taxpayer's financial situation.
Hi and Assalamualaikum. My name is Nur Rashidatul Husna, and I will continue with the disposal and acquisition dates. So in this part, we will learn about how to determine the disposal and acquisition dates of an asset. Okay. The first one is from paragraph 15, Schedule 2 Rpgt Act. It is about the general date of disposal and acquisition date. Okay, the first one is when there is a written agreement for the disposal of the asset. So the disposal date is on the date of such agreement, which is the date on the agreement. And when there is no written agreement, so the disposal date is on the date of completion of the disposal of the asset. So what is the date of completion? And how can we determine the date of completion? So the date of completion of a disposal of an asset is the date which the ownership of the asset disposed of is transferred by the disposer, or the date on which the whole of the amount of the consideration for the transfer of the asset has been received by the disposer. It means the disposer have received their money, whichever is the earlier. Okay, next is from para 15A. It is about date of disposal in particular cases. Okay, the first one is in the case of a gift of an asset on death. So the disposal date is on the date of transfer of ownership of the asset to the recipient. The next one is in the case where a legatee accepts an asset in place of a money legacy, means he received asset instead of money. So the date of disposal is on the date of transfer of ownership of the asset to the legatee. And the last one is in the case where an asset of a deceased person is transferred to a legatee by his executor or by the trustee of a trust created under his will. So the disposal date is the same, which is on the date of transfer of ownership of the asset to the legatee. Okay, next is from para 15b, which is about the date of acquisition in specific cases. So let's see the case. The first one is where an asset of a deceased person is disposed of other than to a legatee by his executor. So the acquisition date is on the date of death of the deceased person. Okay, next is an asset is acquired with a financing facility provided by an Islamic bank. So the acquisition date is on the date of the agreement for the acquisition of the asset entered into between the acquirer and the person. Okay, the last one is a land vested. It means given a right in a person as a result of a partition mentioned in subsection 2.4. So the acquisition date is on the date of acquisition of his undivided share in the land as a co-proprietor. Okay, now let's see one case to make us understand better on the acquisition and disposal date. Okay, the taxpayer purchased 2 shop lots which were paid out in full on 18 September 1984. The taxpayer sold the shop lots on 13 August 1985. So the same day on which all the rights, title, interest and liabilities in the shop lots were transferred to the taxpayer by way of a deed of assignment. The taxpayer was assessed to Real Property Gains Tax, Rpgt, and the IRB took 18 September 1984 as the acquisition date of the property. So here we can see the date of acquisition actually was 13 August 1985 because on that date the ownership of the property was transferred. As we can see, it mentioned that all the rights, title, interest and liabilities were transferred on that date. Okay, the next subtopic is about deduction allowable only once. It is from paragraph 32 Schedule 2 Rpgt Act. No amount given by way of a deduction shall be allowable on the disposal of an asset by any person in a computation under this schedule more than once. So we are only allowed to deduct the disposal of an asset once in the tax computation. Okay, next is certain losses not allowed. So it is from paragraph 33 Schedule 2 from the same Act, which is Rpgt Act. It mentioned that a loss suffered in respect of a disposal shall not be allowable if, the first one is, the date of the disposal was before the date of coming into force of this Act. So if it's happened before 1976, it is not allowed. And then any gain accruing in respect of the disposal would have been exempt from the tax under this Act. Then the disposal is not included in a return made under subsection 13(1) or 2. And the last one is the disposal is a disposal of a chargeable asset under paragraph 34A. So that's all, and I will pass to other presenter.
Hi, Assalamualaikum. My name is Arif Nadir bin Afandi. My matrix number is 264947. So here I will continue the presentation. So I will explain about 8.3, chargeable person for Rpgt. So refer to section 6 Rpgt Act 1976. Should state that every person, whether or not resident in Malaysia for a year of assessment, should be rechargeable with Rpgt in respect of a chargeable gain accruing to him in that year on the disposal of any chargeable assets. Schedule 1 of Rpgt 1976. So the first one is body of person and partnership, co-proprietorship, incapacitated persons, non-residents, rulers and ruling chief, a company, Hindu joint family, estate of a deceased person or trust, and the last one is limited liability partnership. So they are all of them will be chargeable persons that states under Schedule 1 of Rpgt 1976. So next I will explain about 8.4, the tax rate for Rpgt. So Rpgt is chargeable on the total amount of chargeable gains accruing to chargeable person in respect of each category of disposal of chargeable asset. Depending upon the length of time a chargeable asset is held prior to its disposal. So section 4 bracket 1 Rpgt 1976 state that a tax should be charged at the appropriate rate specified in Schedule 5 in respect of each category of disposals that stated therein. So next I will explain about Schedule 5 in the next slide. So now I will explain about the Schedule 5 of Rpgt 1976. So for the tax rate for in Schedule 5 is divided by 3 components, which is the company, individual, citizen and permanent resident, and the next one is individual but non-resident and non-permanent residents. So for the first duration, which is within 3 years from date of acquisition, it shows that the 3 components are at the same rate, which is 30%. Then in the 4th year, the company and individual citizen are reduced to 20%, but not for individual non-citizen and non-permanent resident, which it stay at 30%. So in the 5th year, company and individual again reduced to 50%, and but not for individual. It still stays at 30%. So in the 6th year and acquisition year, for the company and the individual non-citizen are same, which is at 10%, but for the individual citizen and permanent residents are at 5%. So that's all for Schedule 5 of Rpgt 1976. So next I will explain about the exemption. So there are 3 exemptions for Rpgt tax, which is the first one is Schedule 4, the second one is Schedule 3 and Section 8, which is private residence, and then the third one is Section 9, which is ministerial exemption. So we will go through one by one, and I will provide the example for Schedule 4. Thank you. So the first one I will explain about exemption in Schedule 4. So for the paragraph 1 said that again accruing in respect of the disposal of a chargeable asset before the date of coming into force of the Rpgt Act will be exemption. And the second one is paragraph 2, an amount of 10,000 or 10% of the chargeable gain, whichever is greater, will be deducted for exemption. And the third one is again accruing to the government, a state government or a local authority. So that's all stated for exemption in Schedule 4. So next I will explain the example of for the paragraph 2. So as I said before, I will explain more about the paragraph 2, which is stated that an amount of 10,000 or 10% of the chargeable gain, whichever is greater, will be deducted for exemption. That state in Schedule 4 before. So if the asset is partly disposed, the amount allowed is accordance with the formula, which is A over B times C. So I will explain what is A, B, C. A is a part of the area of the chargeable asset disposed, B is the total area of the chargeable asset, and C is the 10,000 or 10% of the chargeable gain, whichever is greater. So let's move to the example that I have prepared. So for the example one that I have prepared is, the situation is on 10 May of 2014, Saleh, a Malaysian acquired 8 acres of land in Johor, then at an acquisition price of 800,000 ringgit. after 3 years, on 25 July 2017, Saleh sold 5 acres of the land for 700,000. So this is the calculation. So disposal price 700,000 less by acquisition price, which is 500,000. Then we get the chargeable gain 200,000. So we use the para 2 that scheduled for exemption here. We need to calculate whichever is greater. Is that the 10,000 or 10,000 or the 10% of chargeable gain. So we use the formula, which is 5 over 8 times 10,000. We get the 6,250, or then we calculate the 10% of chargeable gain, which is 10% times 200,000. Then we get 20,000. Then whichever is greater will be take for the calculation. So here the 10% of chargeable gain is the greater, 20,000. So we take the 20,000. Then we get 180,000. So for Rpgt payable, RM 180,000 times by 20% of, then we get 36,000. So here the example 2 is the same Saleh, which is the person who buy on 10 May 2014, he buy the 8 acres of land in Johor, then at acquisition price of 800,000. But the situation changed a little bit here, because he at 25 July 2017, Saleh sold 5 acres of the land for 540,000. So the disposable price are different from example 1. So here so the calculation is same, but the chargeable gain is 40,000. Then for the exemption, I want to show that the 10% of chargeable gain is less than the 10,000 of the formula. So we take the formula 6,250. Then the Rpgt payable of Saleh is RM 33,750 times 20%. Then we get the 6,750. So if any one of you are confused why we times 20%, we refer back to the schedule 5, which is the duration, the tax rate. So the tax rate Saleh is, we use in the 4th year, because 14, 15, 16, 17. So Saleh sold the asset at the 4th year, so 20%. And Saleh is a Malaysian, so he is the citizen and permanent resident. So next I will explain about the other exemption, which is Schedule 3 and Section 8. Is regarding the private residence. So Section 8, the eligible person shows that the eligible person for this exemption is a citizen of Malaysian or permanent resident. So the non-resident and non-permanent resident are not eligible for this exemption. So for this, in the Schedule 3 state that the private resident definition is a building or part of building must be in Malaysia occupied as a residence. So there is no calculation here, but it just want to state that the exemption is eligible for this. So this is just a requirement. So in Section 9, Ministerial Exemption, the Minister of Finance is empowered under this section to exempt any person from Rpgt. So for example, under Rpgt Exemption Order 2007, exemption from Rpgt was granted to any person of to any person in respect of any disposal of chargeable assets. However, this exemption was removed by Rpgt exemption order in 2009. And that's all from me. Thank you.